You're recording this video for close trade Tuesday, 19th of February 2013. I'm going to go through today's trade really slowly because the last couple of weeks got some messages saying that I talked too quickly, and I do know I'm kind of conscious that I ripped through my charts way too quickly. And sometimes these videos run quite long and I'm covering quite a lot of information, and I feel as if I don't do it justice, and maybe I should just talk about one thing at a time. And today's email from Didier was kind of classic, and so it is worth going through today's trade just to explain it. So Didier says here in this email, "Nice trade today, thanks for sharing. Interested in the indicators, but I have a question about today. If I got it right, you pulled the trigger because on the 1500 and 4500 charts, resistance was broken and you had support on the 500. Am I right? Thanks, Didier." Well, Didier, you're almost right. The point of the indicators, there are three indicators and they're non-correlated. They're all pulling analysis from three different pieces of information, data that's coming from the exchanges, and it's the combination of those three pieces of information that kind of helps me make these trades. So the first one is beta sine wave, which is based on price. The second one is beta pro-am, which is based on average trade size, and then the third one is beta momentum, which is based on buying and selling volume. So three different ways of analyzing data comes from the exchange, non-correlated. You get the maximum amount of information from the data that's available to you. So let's go through today's trade just in a little bit of detail because it shows how the combination of those three indicators comes together to be able to help you make a trade. So first of all I'm going to do is I'm just going to pull up the 1500 tip bar chart. For me, the 1500 tip bar chart is the most important one. It's the middle time frame. The 500 tip bar chart's used for kind of fine-tuning entries and just seeing at a very refined level what's going on. 4500 tip bar chart is a higher time frame to look kind of the bigger picture and understand what's happening 2 or 3 days kind of combined. 1500 is the middle one. It's kind of just right. It kind of gives you enough information to make decisions about decent trades, 4-point type trades, and the information is particularly on beta pro-am is kind of very pertinent on the 1500, whereas you might be overloaded with a little bit too much information on the 500. So let's concentrate on the 1500 tip bar chart. And job number one is to get the trend direction right. If you got the trend direction right, you can make a lot of mistakes and still come out and make money. So job number one, trend, what's going on, and for trend, beta momentum is the absolute key. So 1500 tip bar chart, let's just go back. This was the open. This is all of today's trade on 1500, and this was the open today. So we go back a little bit. This is kind of the overnight session. We had a little bit of a dead time over the last 48 hours because we had President's Day, we had the open on Sunday, and so on, and the markets between that just didn't do very much at all. This is kind of the overnight session leading up to the open. So kind of been hanging around this 15-18 type level for all that time. But we go back to Friday, and the last exhaustion patterns that we had on beta momentum, this is beta momentum down below here, is exhaustion selling. We had exhaustion selling here and here, getting the move going and then ending the move. So we've had our exhaustion selling, we've put in our bullish divergence and our flush pattern, flushing out the last of the sellers. So all of that activity has gone into forming a bottom down here in the 15 teens, 1512 down here. Now, because we've seen exhaustion selling on the downside and we've started to rally from there, this market has not topped out until we start to see exhaustion buying. So remember, this is the beginning of the day. The day's just open here on the 1500 tip bar chart, the right hand side. In the background, we've got an uptrend going on, and we've had our exhaustion selling, bullish divergence and flush patterns to end this downward move. So we're starting to move to the upside. So beta momentum shows us that we're in an uptrend, and this uptrend is not over until we see the first of all, we need to see exhaustion buying, and then we need to see the first bearish divergence signal. Now if we just roll on through this chart a little bit, here's all our exhaustion buying. So this exhaustion buying happened over a sequence of bars as we ran a whole bunch of stops up here in the 1520s, and then our bearish divergence kind of comes in here. So that's the first trigger that starts to say we're setting up for a downtrend. Now remember, we also need to see price confirmation, and because this market hadn't rolled over by 11 o'clock in the morning here, it's likely to make new highs during that day, but just by a little bit each time, a half point or a point each time, kind of keep on going, which is what we had where we kind of topped out here at about 28s, 29s. Okay, so that's our uptrend, and because we've now put in exhaustion buying, we can say that this trend move is over. But at the beginning of the day, all we'd seen so far was exhaustion selling, and we'd set off into an uptrend. So better momentum first of all. Now beta sine wave, We need to see trend moves end with pullback to end of trends. Now, on the downside here, it was not a classic kind of pullback to end of trend. If this had signaled below support, this would have come off as a pullback to end of trend sequence. But we hadn't bottomed out. We'd seen pullback to end of trend in the overnight kind of session, kind of pre the open, but it hadn't come along with this exhaustion pattern to end this market. And then what we did is we broke again above a resistance line here, and we were holding above that resistance line. Once we start holding above a resistance line like this and kind of testing down a little bit, where resistance becomes support and bouncing off it, this means that we're going to move into an uptrend, and this market will keep going until we see a nice pullback to end of trend sequence. So this is the trending activity, and then we go into a final piece of cyclical activity with pullback to end of trend. So because we were hanging above 1500 here, that means that we're likely to be in an uptrend, and we need to see pullback to end of trend before this thing is over. So Didier's comments about holding above the 1500 and on the 4500 resistance, that means we're in an uptrend. So better sine wave is saying as soon as we're showing a pattern like that, we're going to continue into this uptrend until we see exhaustion buying on the left shoulder, and then a pullback to end of trend sequence. Okay, so second indicator, better sine wave, saying that we're in a trend move at this point here that's not going to be over until we see pullback to end of trend. And then after that we just go through some more cyclical activity. We break into another little uptrend, but more cyclical activity here. This is just kind of playing out for the rest of the day, and tricky trading doing this. You should always be kind of going with the trend, but these moves will be a little bit violent and not go very far, maybe a point or two in the right direction. But this is the bulk of the move, the meat of the move that we want to get out of this trade. So indicator number 2, better sine wave. We're holding above resistance, therefore we're in a trend move, and it's over when we see pullback to end of trend for a nice kind of trending sequence. Then indicator number 3 is better pro-am. Better pro-am, we're showing amateurs and professional bars. I'm particularly interested in what the professionals are doing. Now, pre-open, you can see a couple of things kind of going on. We had a little bit of a topping out move here with the professional bar kind of stepping in, but then each time we sold down towards this resistance becomes support line, you can see a blue professional bar kind of comes in. Blue professional bar kind of comes in at the lows. So pre the open we had these little dips being bought by the professionals. We're in an uptrend because we're above resistance, and then as soon as we see this is kind of jumping the creek. We had a little bit of resistance. It was in a little bit of a channel there, kind of 20.5. We couldn't get above it, and then this point here is the professionals buying that breakout in anticipation of jumping the creek, and we kind of come back into that zone with this blue professional bar here, and we're away. The lows of that hold, the lows of this one hold, and we're above resistance here, so we've got to move into this pullback to end of trend sequence. So at this point here we've taken off into an uptrend, and then we bust a whole bunch of stops kind of going up here. This thing happened very quickly. We kind of broke through the 21 to 22 kind of range here, held for a second, and then we broke through 23, 24 very quickly as well. So that was all kind of busting stops kind of going up here. So that's the combination of these three non-correlated indicators. First of all, better momentum is showing that we're in an uptrend because we have not seen exhaustion buying yet. All we've seen is exhaustion selling in the background here to bottom this move. This move is not over until we see exhaustion buying. Then we've broken above resistance. Here we're holding above resistance, so then we're likely to see a pullback to end of trend sequence like this. And then on the dips, the professionals are kind of stepping in and buying the dips, and the lows are holding. And it's not until we see professionals taking profits with exhaustion buying up here that this move is over for the time being. You go through a little bit of cyclical activity, kind of testing those highs, but this is the bulk of the move that we want to be on. If you went down to the 4500 tip bar chart, you can see a similar thing. 4500 tip bar chart on Friday's activity, we'd had our exhaustion buy and bullish divergence kind of come in. So we're looking for that in order to end the move. And this is the sequence we're looking at here. Once we see our exhaustion buying and bearish divergence, then we can start looking for changes in trend. But we hadn't had that at the beginning of the day, so we're still in an uptrend. Secondly, we're hanging above resistance. It was kind of pre-open. We are hanging above resistance on pullback on the 4500 tip bar chart. So because we had this kind of going in our favor, we would like to see pullback to end of trend to end this move like that. And then lastly, we had blue professional. You can just see it blue professional dip pre the open. The low doesn't get taken out, the high gets taken out. A little bit of blue professional bars kind of buying that breakout, jumping the creek, just like 1500 tip bar chart, bang, and we're away. Now, the reason why we've overshot the pullback to end of trend here is just because, you know, it was a trending day. We hadn't rolled over by 11 o'clock in the morning, then we're likely, you know, it's not going to be a reversal day. And all we're going to be doing is just, there's going to be all these professionals wanting to go short, amateurs wanting to go short, you know, at the end of the day. Once midday and lunchtime kind of comes through, forget it. It's unlikely to roll over or have a, yeah, you'll have rollovers, but you won't have decent moves into a trend move on the way down. That 11 o'clock window is really important for, you know, the professionals have used all that early buying by the amateurs in order to get out of their positions, and then they roll the market over and it kind of goes down into reversal market by 11 o'clock in the morning, and then they've got plenty of time during the rest of the day to make good money out of a reversal trend. But if it's not happened by 11 o'clock in the morning, all we're going to do is we're just going to test these highs, you know, break them by a half point or a point, kind of going up, and you can see just more professional bars kind of, you know, active at those highs, kind of taking profits on days like that. And then just down to 500, because we've got it on the chart here, this is the beginning of the day. So beginning of the day, again, with this vertical line, the last signal we'd seen on better momentum was exhaustion selling at this point, exhausting the sellers, bullish divergence kind of comes in, and we roll the other way. We've got amateurs, so you can see we're just caught in this little channel, a Rambo to Rambo channel, just showing the amateurs are buying a breakout here and selling a potential breakdown here. So we're just caught in this channel, just pre the open, a little blue professional bar kind of buying this dip here. Professionals, the amateurs get wrong-footed at this point here. The market starts to break away. We have a little bit of a test down here with an amateur down bar, and then the blue professional bars kind of step in again, buying that, and we break out into this uptrend here. Don't worry so much about the exhaustion buying on the 500 tip bar chart. That's showing the strength of the move. So this is showing, you know, the professionals trying to get on board this move, and then it goes really kind of fast to the upside as we kind of break those stops kind of up there with a little pullback to end of trend sequence on 500 tip bar chart. But remember, the 1500 tip bar chart's the key chart, and at that point there we were showing that we hadn't had exhaustion buying yet, so the uptrend's still in place. We're hanging above resistance, so we're in an uptrend. We've got to see pullback to end of trend, and then the dips are being bought by the professionals. Therefore, you know, they're kind of expecting break to new highs. So we jump on board, make a little bit of money, get out and be done for the day. So hopefully that was helpful. I hope I kind of went through that a little bit slower, but it's, for me, it's a combination of, you know, these three pieces of data with the non-correlated indicators that gives you the maximum amount of information. What are the professionals doing? What are the amateurs doing? Have we had exhaustion buying and exhaustion selling to kind of begin moves and end moves? And then can better sine wave help you show where we move into trend moves in price that end up in pullback to end of trend sequences to show you kind of likely ends of trending moves. There we go. Hope that was helpful.